Hi and welcome to this live currency strength indicator table video with me, John, on this Thursday, the 22nd of June. Here you can see that the yen continues to top our tables, meaning that we should still be looking for that risk on opportunity and that selling of the Japanese yen. Now, we did talk about some multiple opportunities this week. We talked about a pound yen entry, talked about a pound US dollar entry. So I will cover those just to give you an update of what's happened, what we've done, and etc. Now you can see that the US dollar has also appeared on the table on the weak side, so we do have confluence there with the US dollar as a weak currency, or that being in W3. Euro is topping the day traders table once again as the strongest currency, so we're going to take a little bit of a look into Euro yen, but we're also going to have a look at CAD yen as well, as there could be potential upside in that market. Looking at Euro yen then, so I'm on the weekly time frame and I've been looking for ideas of where price could potentially go to. Now there's only kind of two areas that I can really point out on the chart where price may want to sort of approach. Now we do have the 159 level, which kind of cuts through this range that happened back in 2007 and 2008. We had this sort of sideways movement in here, this range, obviously before the 2008 market crash, and price reached the highs of the 169, the lows of the 149 or 148 spot 50s, which was actually broken through a few weeks ago, and price is now trading back to the upside. So I've picked out the middle of the range. There's a bit of a level through there around about the 159, which price could look to target in the near term, but ultimately we could see prices all the way back at the 169 handle, which is going to be a fairly significant move from current price. It's around about 1,300 pips away, so huge potential move to come here on Euro yen if the risk on sentiment remains. Now fundamentally there is no real change to what we're seeing in the picture of the yen moving from that risk on to risk off. So there's potential for that risk on to remain, potential for the yen to remain super weak, and that could cause prices to move much higher. Now 159, like I said, is immediately targets, and if I go down into the daily time frame, you can see we didn't really get any kind of pullbacks into the recent breakout highs around about the 151. Instead, we had a very shallow pullback, and now price is trading above the 155s again, driving higher. So what I've done is I've looked at a couple of different plays that we could look at going into today's market. You can see that we've had a really accelerated move here, and you can tell that by when you place your trend lines. The trend lines you can see are getting steeper and steeper, so there's an evidence of a very strong trend here. Now the area that I quite like in particular is this one just down through here, which is around about the 155.40, and that's where I'm going to be looking to see a potential entry into this market, especially from a swing trading point of view, because what I want to see is a little bit of a deeper retracement coming back into those swing highs there before seeing a continuation up to the 159. Now that still gives us a 300 plus pip target. Our stop losses are going to go just below the sort of swing here, around about 115 pips, and we're going to look to target that area there. Now I said there's a couple of different entry points you can use, because obviously Euro yen is topping our day traders table. So from a day trading point of view, if the momentum's going to be with this market, you want to potentially look at a tighter entry. Now on the hourly chart, if I just zoom in, you can see that we've actually had this sort of consolidation which formed over the past sort of into sort of yesterday's close and into the Asia session there. Now if momentum is going to continue, we may see a retest of this sort of overnight zone for a continuation trade to the upside. So day traders could be looking ultimately for a long position around about the 155 spot 90 handle, stop losses below the low here at 155 spot 60, and if that momentum plays out, then you have a huge risk reward trade potential there, because you're only going to have you're only going to have a very slight stop loss there, you're going to have about a 40 pip stop loss. Sorry, my mouse is going a bit wild. With 159 pip target. So huge risk reward return there potentially to be had. If I was just to put our risk reward calculator on there, you know, well beyond the 1 to 3, perhaps even sort of 1 to 8, 1 to 9s there on that sort of potential. On what we're looking at an entry around about the 155.30s with that 115 pip stop loss. So we're actually looking for the 1 to 3 on a larger potential move there, because if this is going to play out in the long term, we should expect some kind of pullback in the near future. So that's what we're looking at there. Another market of interest, obviously, euro dollar, euro topping that day traders. So again, is that momentum with that mark. And if we head over to euro dollar at the moment, you can see very similar to yen, we've got these steeper trend lines that are developing, showing us that the momentum is with this market. And if I go up to a daily time frame, you can see price is actually heading towards some key highs around about the 1.1075, or you can make a sort of opinion that it's heading up to the 1.1100, but we haven't quite actually tested that level just yet. But that is where price looks to be heading towards. If it does head towards that area there, then again, if we look at the 4-hour time frame, the previous high is at the 1.0950, which is also a level in the past, could be suitable for an entry here, with the option to look for that longer term move to that 1.1100. So definitely something there as well. I did want to take a look at CAD yen. CAD yen obviously on the tables as well. Again, very similar to euro yen though, so it depends your sort of risk appetite here, whether you want exposure to yen as again. But you can see here, very similar in terms of overnight into the close, and overnight we had a bit of a consolidation. Price has traded above that. If price comes back and gives us an entry around about the 107.85s, stop losses below the low, the next level of resistance is up at the 109.75. So even if we targeted, let's say, a really conservative sort of target at 109, for instance, that's 115 pips with only a sort of 30 pip stop loss. So again, very positive risk reward ratio, but this is definitely one more suited for a day trader than it would be a swing trader. A swing trader may want to open up to the 4-hour, may want to look at entries more around the 107.60, where you can see we've had that little bit of resistance and support. So definitely one to choose from there. Obviously we talked about cable recently and pound yen. If I just go over to pound yen, we actually got out of these trades for break even. Price has actually rallied, but our entry was this 108.75 area. I actually closed this out in profit. So yeah, we could have had 76 pips out of this, but if we look at our tables, although pound is S1 on the trend traders, it's been removed from the day traders. And in fact, this morning it actually came up as a weak currency on the day traders. So ultimately, stuck with it as long as I could. But as soon as I saw pound appear as a weak on the weak side of our table here, I took the position off. The same as well with cable, so came out at break even on cable as well. We had entries around about the 127.60s, and yeah, came out here break even. Now the beautiful thing about these trades though is that we gave them room to breathe in the first place, because if we'd gone with tighter stop losses, we would have been knocked out. But we used our ATR stop, which actually brought us in around about 100 pips on our stop loss, and that worked out great for us, because although we went into drawdown by 70 odd pips, we gave the market a chance to breathe, came into another support level, and then rallied. Now you could argue, well, why haven't you kept it open? Well, I told you, pound came onto the weak side of the table, And as soon as I saw that from a day trader's perspective, that told me that maybe the momentum's not with the pound. Also, today we have risk events. So you've got the Bank of England potentially going to hike rates by 25 or even 50 basis points after the recent CPI reading. So there's a potential for a risk on event to cause, overexposure, basically, is what we were looking at as well. So we had two pound pairs, pound dollar, pound yen. Going into a major risk event is never usually a good option either. So we rather weigh up the risk, give the risk allocation somewhere else where there's actually movement, like euro yen, like CAD yen, and see what happens in those markets. So thanks for watching the video. I hope that made sense, and I'll speak to you in the next one.